Good morning, good afternoon, good evening from wherever you're watching from. Welcome back everybody and welcome back to the channel. Last week I discussed with you some candlestick confirmation patterns and the reason why you need to get confirmation pattern to trade when you're trading as a trader. We learned about 3 candlestick confirmation patterns. The first one we discussed was the bullish or the bearish morning star patterns. We also discussed the bullish or the bearish engulfing patterns. And then we also discussed the tweezer patterns, either bullish or bearish. So these are the 3 confirmation patterns that we discussed last week. But the video was getting longer, so I couldn't show you real example on the chart. I was not able to show you the raw examples and the raw entries on the chart. So today is part 2 of confirmation patterns. I'm going to show you real examples on the chart, how you are supposed to spot it out, how you are supposed to enter, your entry point, your exit criteria, and your take profit criteria. So without wasting my time, let's go to the charts and let me show you the examples on the chart so that when you're trading, you also be able to do the same. But before we go, if you're here for the first time, subscribe to my channel and hit the like button. If you're my old subscriber to then, as usual, just like the video and let's move on. Okay, thank you for doing that. So now let's go to the charts and let me show you the examples. Okay, so this is a forex chart. We know that I trade forex here, right? This is a forex chart. We traded it on Monday, right? Remember this chart? Okay, so now let's just go to one of the charts. This is H1 because I expect that when you are trading, you trade on H1 and on M15. You know that I mostly take my trades on H1 and M15, but I do the live scalping only on the M1 so that I'll be able to record the trades. So this is a H1 chart of the same charts we trade the other time. And what we are here for is to spot out those candlestick confirmation we learned, applying them in the raw charts. So the first thing you have to do if you want to spot this kind of candlestick patterns is make sure that the market is trending, right? Always make sure the market is trending because those patterns are for trending continuations. Those patterns are for trending markets. So you cannot trade those patterns in ranging markets. As I always say that you must trade strategies according to the mode of the market. So assuming the market is trending, then you only apply those patterns. Do not apply those patterns in ranging market mode. So the first thing you have to ask yourself is the market trending? Is the market trending? And how do you know if the market is trending? Using moving averages. If all the moving averages are in line with each other, it means the market is trending. Or using what? Currency strength meter as we do here. I don't have to talk about currency strength meter here again because you know them already. So you have to find out that the market is trending. And if the market is trending, now you search for this particular entry point and entry criteria. So let's see a point where the market is trending because this market has already played, so it's easy for you to spot out. But for education purposes, let me just show you a point where the market was trending. Let's ask ourselves, can we find these kind of patterns still here? Let's see. This is where the trend began. First push, and then second push, and there was a third push. So which means from this moment, you should be able to realize that the market is already trending, right? Because we have this exact pattern. Then from then onwards, are you going to spot our patterns? So let's see. The first pullback, what can we see here? We can see the bearish evening star. Can you see that 3 candle play? Guys, can you see? 1, 2, 3. Simple. Where are you supposed to enter? You enter after the candle close, and then you put your stop loss behind the pattern, and your take profit target of 182, and then you're out of the market. So if you entered here, you ride the market all the way down to this point, and you take your profit. Very simple. The same evening star that we learned, the 3 candle play, the same pattern is here. But if I was the one trading this chart at that particular time, I wouldn't have taken this trade because this candlestick is very long. Can you see this? The last one is very long, and I would have waited for a discount. You know, sometimes I wait for a discount, so I would have waited for market to try and pull back a little, and then I would rather now join the trend down here. So I would have rather entered at this zone and waiting to enter that place. I wouldn't have gotten the trade because the chart wouldn't have pulled back to that zone, right? The chart wouldn't have pulled back to this zone because as you saw, the market just went down straight forward. This particular pattern has higher probability. So anytime it forms, the market goes to the direction where it's supposed to go. Okay, so if you are trading, then you can just trade it or you can just sell it immediately. The candlestick close and then you ride the market down. But if it was me, I don't rush to take trades. So I would have waited for a small discount. So the entry criteria is when the candlestick close and then you enter and then you ride the market downwards. You take your take profit target of 1 to 2. So if you are risking 100, then you make 200. So let's say here you were to risk $100 here, your profit should be what? $200. 1 to 2 risk reward. That's all. Now let's see another point. We can see that the market pull back again, and you can see the same pattern here. Can you see the same pattern here? But this is a different variation of that same pattern. What makes it different? Here in the first pattern, you can see that there was only one indecision candle in the middle. 1, 2, 3, with only one indecision candle in the middle. But the second pattern, you can see the same 1, 2, 3, but there were about 4 indecision candles. And this is a different variation of the same setup. This is why when you are trading, you begin to master certain petty things because of what? The variations. When you learn something, you will not get the same thing on the chart every time, every single day. You get different variations. Just that you must know the base, you must know the primary function of that particular setup, or you must know how they form. Then when you see different variations, you'll be able to trade them successfully. So you could see that at this particular zone, the market gave us the same pattern, but it was a different variation. Can you see? So keep it in your mind. This one and this one. Okay, so when the market pull back again, did we get confirmation pattern? Yes. Which confirmation pattern is this? Can you tell me, guys? Which confirmation pattern is this? 1, 2. Which confirmation pattern is this? The bearish engulfing, right? Because this candle has engulfed this candle. Last week, we learned that if the second candle is bigger than the other one in the direction of the trend, then it is engulfed. So this candle has engulfed this candle. So where are you supposed to sell? You are supposed to sell when the market closes, and then your stop loss behind the pattern, your take profit target of what? 182, and you're out of the market. So which means if you took the trade here, you ride the market all the way down here because 182 risk reward. Very simple. These patterns occur on the chart frequently. So if you know what you're looking for on the chart, then you not suffer when you're trading because trading becomes very simple if you know what you're doing. So now we found the evening star, right? The star patterns, and then we found the engulfing pattern. When the market pull back again at this zone, do we get a confirmation pattern? No, there is no confirmation pattern at this zone. And even if we wouldn't have still taken any trade here because we would have already been in a trade here. If you are in a trade here, already in a trade here, and the market pull back to this zone, you won't be taking the trade because it will look like the market is trying to take you out, right? And the market reverse back and then it hits your take profit target. This is why when you're trading, you shouldn't be rushing to close your trade. The market has not taken you out. Don't be rushing to take your trade, okay? So these are simple examples on the chart. Let's scroll back in time and see if you can get another example. Okay, at this moment when the market was trending, you can see, can we find these same patterns along the chart, along the trend? Can we find them? Yes, we can find the same pattern here. See, guys, are you watching? The same pattern here. But at this point, you can't trade this pattern because you wouldn't have known if the market was ready to trade. So the trend was now forming. You can't trade this pattern. But alongside the chart, can you find another example? Yes, we can see the same pattern here. Guys, are you watching? The same pattern here. Yes, every time you see these patterns, almost every time on different forex pair or any chart you are trading. So where are you supposed to enter? With this chart, you put your order here, right? You put your order here. Let me pull this one. Now this one will become our stop loss. Let me clean it and draw it again so that you become comfortable with it. So here is our stop loss. Are you watching? And then our take profit target of what? 182. So we would have ridden the market up here. Very, very simple. Okay. So let's go to a point where the market was trending again. Another point when the market was trending. Yes, good. At this zone, the market was trending. The market was trending. Can we find the same patterns along the trend? Let's see. Can we find them? Can we find them? This looks like an engulfing pattern. Can you see, guys? It was getting to look like both the evening star or the morning star. But this one, the initial candle was too big. So you take it as an engulfing pattern. But it is still a different variation of the same setup you are looking for. Okay. So here you would have entered here. You put your order here and your stop loss behind the pattern. Are you watching where I'm putting the stop loss and the orders? Don't just look at the pattern. Most of you guys, they just look at the pattern and they won't listen to where you're supposed to put your stop loss and where you're supposed to put your take profit target. If you miss your stop loss or you set wrong stop loss or you set wrong take profit target, it has consequences on your account. If you set wrong stop loss or wrong take profit target, it will have consequences on your account. I've explained this in one of my videos already. So setting proper stop loss is very important. It's not just the entry, guys. When you're trading, both the entry, the stop loss, and take profit target is very important. So watch out. So you put your stop loss here, your take profit target of what? 1 to 2. If you are risking 20 pips or 30 pips, you take the same twice as that. And then, so you'd have taken your profits here. That's all. You write the market up. Simple. Where else can we see an example? Here is a tweezer. Can you see? Here is a tweezer. But at this moment, we couldn't have taken the trade because we would have already been in this trade. Can you see? Already been in this trade. So we could have taken this trade. But if you were late and you missed this entry, you could have taken this one if you were late. Okay. Other example. Can you see another example? See, the same pattern we found here. The same thing was forming here. See, the same pattern we found here. The same variation is here. Can you see, guys? The same variation is here. So the same thing. You take your order, you buy here, and then you stop loss behind the pattern, a good place, and take profit target 1 to 2. Guys, it's very simple to trade these patterns if you know how to spot them out. So when you're trading, be patient and wait for them to fall. Okay, so I think it will be enough, right? You've seen enough example. So what you have to do is that you go to your chart and practice. Search for this kind of pairs, search for the forest pairs and practice and see if you can find the same setup I'm talking about, the same entry criteria I'm talking about, and try to see as if you're buying, you are selling. Just try. You can try with demo account or just use your lines as I'm using the lines here. Use the lines to tell, okay, I would have entered here, I would have exited here. Keep practice, because if you don't practice, you can't become good at anything. So practice makes perfect. No matter how best your teacher is, no matter how good your teacher is, if your teacher trains you and you don't practice on the chart, you cannot become successful. You get it? You cannot become successful. So go to your chart and practice and become good at it, so that when you're also training, you also become profitable. So I think that will be all for this video. But before you go, let me tell you something. Most people think that they will just learn one thing and then they'll be able to become profitable and start making money out of the market. But in real life, it doesn't happen like that. I'm doing it here because I've been doing it over and over and over. So I know how to spot it out. You, the person who is learning, you're going to take time. And even after you've learned, you're going to now practice this on your chart. Let me give an example. Who is the best footballer in the world? I think this is going to raise a controversy, right? But let's take the best footballers. Messi, Ronaldo, who else again? Is it Mbappe? Okay, I'm not really good with football, but those are the ones I know, right? Let's say Messi decided to run a football club, and teach people how to play football. After all the teachings and the trainings, if the upcoming footballers, do not take the lessons and go to the field and practice, do you think they can become best footballers? You just guess. Do you think you can guess they can become best footballers without taking the best practice and practicing on the chart? Though they've learned from a very great guy, right? A great guy like Messi or Ronaldo or Mbappe, but they cannot become successful footballers because they have not applied whatever they've been taught on their field, on their legs. They have to apply so that they gain the skills themselves. The same happens in trading. Trading is not something very easy like somebody tells you. So if anybody tells you that you put $20 and you're able to gain $1,000 within the next day, guys, run away from the person. The person is luring you. Don't follow easy stuff, okay? Don't follow easy stuff. Just look for reality in something, anything you are doing. Look for reality. So if you are trading is not simple. You learn, you practice. You learn, you practice. You learn, you practice. And then one day you also become good. That's the whole goal. So do that. Go to your chart. Practice and become perfect. You want to become perfect, the skills are in you. When you see the chart, you're able to spot them easily. And when you're training becomes very easy for you. Okay, so go to your chart and practice until you become perfect. I think that'll be all for this video. This was your mentor. If you listen to my advice and you like it, hit the subscribe button and hit the like button and subscribe to my channel and come back every time to watch such videos. And I'm signing out.